It has been a rockin' October for SoFi. Shares of the fintech have spiked 33% month to date. But the stock is pulling back right now, even after the company posted its strongest quarter in history. The financial services platform reported its fourth straight quarter of profitability on a GAAP basis and raised its full-year forecast. With earnings of 5 cents per share and adjusted net revenue of $689 million, both came in above Wall Street estimates. SoFi's success can largely, at least this quarter, be attributed to its lending business. Student, personal, and home loan originations for the bank all soaring year over year. I mean, home up 38%, personal up 26%. But in the face of the massive growth there, SoFi CEO said on his earnings call today that they're no longer just a lending company, but a force to be reckoned with. Joining us now on where the force will flex its muscle next is SoFi CEO Anthony Noto. Anthony, your success in lending is solidified. I mean, that's what it feels like, I think. What are the areas you're now pouring investment and resources into to power the force that you talked about on the call?
Sure. As you mentioned, our business was built on the back of lending. But this year, 2024, we endeavored to diversify the business, make it less risky, less capital intensive, higher margin, and higher ROE. So we've really focused on our fee-based businesses that can scale tremendously. And so in the quarter, we had 64% year-over-year growth driven by the combination of our financial services business and our technology platform business. That business now accounts for 49% of our total revenue compared to 30% a year ago. So we're now evenly distributed between lending and non-lending, and that's why we made the point we're no longer just a lender. And that business, up 64% year over year, is growing meaningfully faster than the lending business, and it's where we'll continue to put significant resources. In those businesses, our SoFi Money, our checking and savings account that gives you high interest at over 40% on your savings account. We have SoFi Brokerage, SoFi ETFs, SoFi Robo. We do IPOs in our invest business. And earlier this year, we launched alternative asset classes, which have done really well: private credit, private venture capital, and private equity. In addition to that, we have our credit card business and our insurance business. And we're really putting a lot of our resources to drive member and product growth there. Our member growth and product growth has remained above 35%. And that's a leading indicator of our overall revenue growth, which is what you're seeing manifest itself in today's results, with that growth of 64% driving the overall growth of 30%.
I mean, it looks really, really good across the board. It feels like you have had, because you come on the show just about every quarter to follow up and update on the earnings, things have just progressively continued to strengthen. And it just feels like you're one of those people who puts one foot in front of the other, execute, execute, execute. But it is really rare to hear a CEO say they don't see clouds on the horizon. And you told Barron's yesterday, I thought this was really interesting. You said in 2025, you don't see headwinds. That's pretty bold, isn't it? What's really backing that?
It is. We have navigated through a really tumultuous environment every year since I joined in 2018. 2018, rates were going up for the first time in almost a decade. We then hit 2019, and the Fed abruptly stopped raising rates. Then the pandemic hit, which led to a recession and an overnight drop in interest rates by 150 basis points. Then the student loan moratorium that lasted 3 years, 2 years longer than it needed to, which really damaged our student loan refinancing business. And then, of course, we faced a 500 basis point rate increase environment over the last 2.5 years. The reason why I said we have wind at our back and why we're looking to 2025 is we're likely going to be in a declining rate environment, which puts wind at our back in a number of our businesses that have not been growing as fast, specifically home loan refinancing and student loan refinancing. But in addition to that, if we have a strong economy, we'll continue to see strong spending in checking and savings and credit card, as well as people looking to invest even more if they can't get a great return on their savings account in a declining rate environment. And then last, a number of companies have really put off the technology upgrades they need in order to meet their regulatory requirements, as well as the incremental risks of fraud and all the AI implications. And so we see a surge in the tech spending as well.
I would imagine. What about that capital expenditure that you have to put into it? I was just at the Money 2020 conference yesterday. A lot of talk about identity fraud. It's unbelievable how electronically and algorithmically the bad actors can just continue to keep tapping on the electronic walls and try and worm their way in.
That's right. And we've launched a couple of really important fraud products in our technology platform. In fact, it's the most popular product that we have interest in. Our ability to do transactional fraud monitoring through AI and all the data that we have with over 160 million accounts enabled through our technology platform is a hugely needed service, and one we're seeing a lot of support behind. We call that payment risk platform, or PRP. And there's another evolution of that coming out called Give. So a real opportunity for us to help the ecosystem overall from all the bad actors.
Yeah, it's really, really kind of depressing. You're just trying to run a business. Consumer confidence, we already showed it. It came in pretty solid. And when you say no headwinds, I imagine that that's sort of part of it. What are you seeing from your clients where they want to make the biggest impact to try and grow their money through SoFi?
Yeah, so the member base that we have continues to do more and more for us. One of our leading products is a SoFi Money product, which is very differentiated with high interest of over 4%, no fees, free overdraft protection, the ability to send your money person to person with a phone number or an email or with Zelle, in addition to doing bill pay. We make that a great product. Once people use it and they make it their direct deposit checking and savings account, we then see them take on another product and another product, which allows us to get a faster payback, and we can invest more in the business and invest in new technologies and new services. This quarter, we had our first large quarter in our loan platform business, which really started back in 2019. The great thing about this business is that we can actually serve more people on the lending side by being hired to underwrite contractually and be paid fees for third parties that want to underwrite the loans that we're not underwriting or wouldn't otherwise underwrite. And so that's an incremental part of the equation that's helped us this quarter. So we're seeing more demand for buyers of our loans, seeing more demand for technology from our partners, and of course, we're seeing really strong trends in deposit accounts and spending.
You know, I look at the stock down 5.6%. There was an analyst today who said the bears are confused. They're confused because the future is rather bright, at least as these analysts are seeing it. Anthony, great to see you. Thank you so much.
Thank you, Liz.